All right, so I just finished reading the Market Wizards books, and they're kind of old. They were done, I believe, in the late 80s, early 90s, or even the 80s or the 90s. I don't even remember exactly. So they're not necessarily perfect for nowadays, because obviously nowadays, like the internet didn't even exist back then. So things are definitely a little bit different. But I still think that they had a lot of good takeaways. Not even if you're just a trader, but just investing in general, because basically everybody that they go over and the guy talked with were traders. None of them were none of them were really Warren Buffett type investors, but a lot of them still did that. But the main focus was the trading aspect of it. First things first, if you get value to this video, please like and subscribe. Really appreciate that. So these are in no particular order necessary. Number one was having confidence in yourself. And again, like I mentioned at the start, if you don't know what these books are, the Jack Schwager is the author, and he basically interviews, it's probably, 15 or 20 of the top traders, or whether it's stocks, whether it's commodities, gold, they vary quite a bit, and basically just goes over like, hey, what got you into it? What were the keys to success? What are some tips, and et cetera, et cetera. And basically what I'm trying to do with this is, what were the parallels? Because if you want to be successful at anything, really the easiest way to do it, in my experience, is, you can figure it out yourself. Like that's possible, but the best way to figure something out is look at the people that are the most successful and draw parallels. What are they all doing similarly? And basically the first thing I noticed is that they were all very confident. Like they're all very, very confident in themselves. And I guess the flip side to that is not to be overly emotional. And frankly, that typically they were confident to the point to where people would be like, hey, maybe you're like bordering on narcissism, to be honest. And this is through a book, so it's hard to tell. Like, you don't really understand tonality or context in some situations. But to be successful at anything, you have to be really confident in yourself. And that's something that's just really, really important. If you want to be successful, you got to be confident, and you got to be confident before you're actually really good at it. And to put that in perspective, I wouldn't be overly confident, but you should always be a little bit more confident than your situation entails. Like if you're a new investor, you want to be confident to the point to where a intermediate investor would be. And if you're intermediate, more advanced. And if you're advanced, you want to be confident to the point to where, hey, I'm a professional trader. And then when you're, there isn't really a set definition of that, but if you are, and you're just killing it, you're beating the market year after year after year, you have to think of it as, hey, I'm the next Warren Buffett, even though it's unlikely anyone will ever get to that point. That's still the mentality you need, right? And not only that, you got to have a chip on your shoulder too. This is something that I really notice about a lot of people out there, is that they're just mediocre, and everything they do is to be, I want to be mediocre. I want to be mediocre. Like they just want to fit in, and that's not going to work out. You need that chip on your shoulder. You always want to be improving, and you always want to be putting yourself in a situation to where you can improve. And you want to put yourself in a situation to where you're comparing yourself to something that's just a little bit better than where you're currently at. Because if you aim too high, well, achieving that, aiming too high in the short run is not a good idea. Aiming high in the long run, very good idea. Short-term goals always should be a little bit better than where you currently are. Long-term goals should be a lot better. Number two, they always had their strategies and their position sizing, like that varied. But the one thing that they all had was they all had a very clear strategy and a very clear plan. And not like the odd time, like the typical response I would hear is, 95 or 99% of the time, I don't even have to think. A monkey could make the decisions for me once the plan, or the modern day better way of putting it would be an algorithm. I just let it work its magic, and you make slight tweaks to it over time. Very rarely was it, I have a hunch that I should, buy stocks or short the market or short this market or go long that market. Like, very rarely did you hear that. They always had a very clear plan and they stuck to it. And the reason that I bring this up is this is how it works for anything. If you want to get more fit, you need to have a clear plan and you need to stick to it. You need to be in the gym X number of days per week. You need to have a diet. You need to be eating a certain amount of protein, carbs, fats, micronutrients, macronutrients, etc., etc. You need to have a plan and you need to stick to it. And the parallels are like I just mentioned. They're similar for everything in life. It's not just trading. It doesn't matter what it is. If you want to improve, you need to have a plan. You need to stick to it, and it needs to be achievable. So that's another very important one. The third one, get out of bad trades fast. This is one that I heard all the time when reading this, is that whenever they were wrong, they cut their losses quick. And this is one of the big reasons why average people are such poor investors, and frankly, they're so mediocre in life in general, is because people nowadays, I mean, it's probably always been this way, but at least to some degree, but people just can't admit they're wrong about things. And there's a lot of aspects in people's lives to where it's just blatantly obvious they're wrong, and they're doing things in a terrible way, but they can't admit they're wrong. They just can't admit they're wrong. So they're never going to improve, and they're always going to be in the bad situation they're in. So the reason I bring this up as well is that if you look at these principles, many of them apply to every aspect of your life. Having confidence in yourself, that applies. Making a plan and sticking to it, that applies. Getting out of bad trades fast, another way of putting that would be admit you're wrong and move on. Number 4, don't get out of good trades too soon. This is another thing you heard a lot, and it's kind of the opposite. A lot of times, people would make a small profit and they'd get out of it. This doesn't mean you always want to hold out until as long as you possibly can, but you don't want to get out too soon. Now, this one's a little bit different as far as life goes, I think, but don't get out of bad trades too soon. This is basically the key to their success. Right? They were quick to admit they're wrong, but they didn't immediately get out of a trade that was up a little bit. And not always, right? There's exceptions, but not always. And the other aspect of these last 2 points is that it all falls into making the plan and sticking to it. Whenever they entered a trade, it was, this is the price I will get out at, this is the price I will sell at. And very rarely did they deviate from that. Number 5, leaving your emotions at the door. This is one of the other big reasons that people aren't successful in investing and in life, is that they're too emotional. They're too emotional. They win a handful of times in a row and they think that they can walk on water. They lose a handful of times in a row, and then they start getting emotional, making bad trades, taking too large a position sizes, etc., etc. So that's another very, very important aspect. This one also a very clear parallel in life and in trading. Leave your emotions at the door. The vast majority of the population is way too emotional about everything. They're way too emotional. You need to think critically. You need to think logically. And the last one is, don't be afraid to be contrarian. And this is another one that has a very clear parallel to life in general, that people, like I mentioned, it seems like a lot of people's goal in life is to be as mediocre as possible, to fit in as much as possible. And no one that's achieved great things has made it their goal, I just want to fit in. I want to be like everybody else. I want to live for the weekends. All I care about is, going out and watching the football game, or whatever the mediocre people do. And there's nothing necessarily wrong with that, right? But the whole point would be, this is for if you want to be well above average, if not elite, or the top 1%, the top 10%. You have to be willing to stand out. Look at Bitcoin, right? This is another prime example of this. The vast majority of the population thinks that, it's a scam, it's going to zero, it's a Ponzi scheme, or whatever garbage people are bringing up. And look at how it's worked out for them. I mean, in Canada, we literally just passed $150,000 a coin just recently. This actually I'm recording before it's going to come out, so it might even be higher than that or lower than that when this comes out, but it doesn't matter. Bitcoin moves around a lot. What's new? The whole point is, back in the depths of the last bear market, it was as low as I think around 25,000 a coin, at least Canadian. So, right, you could have 7x'd your money in 2 or 3 years, whatever it is. How many people? Like I can think of off the top of my head probably 10, 12 people. Not one of them, not one of them has said a word about it. Not one of them. People just, and again, I don't necessarily have anything against people. I don't have a beef or anything like that. That's not what I'm just simply trying to point out that number one, people are deathly afraid of being contrarian, and number two, they're deathly afraid of admitting they're wrong, to the point to where they'd rather miss out on tens of thousands or hundreds of thousands, or maybe even some people's situation, millions of dollars, just because they can't, they're too afraid of being disapproved of by the average person. So you have to not be afraid to be contrarian. And a lot of people think they're being contrarian too. This is another thing. Oh, I'm gonna buy crypto. I'm gonna buy this penny stock. It's like, it might work out for you, but the odds are against you. And not only that, let's say you're up a little bit. Are you going to cash out, or are you going to think it's going to the moon, and you're going to get rug pulled, right? Like, I know someone that bought a stock that did really well post-election. Actually, it was basically right on the election day or the day after, and they thought, oh, it's going to the moon, and I'm going to make all this money. I mean, maybe not necessarily that much money, but they were up quite a bit. I think over 100% at one point, and the stock has since came way down because they didn't understand that. They didn't understand how the market works, frankly, and that everything is forward-looking, and when that kind of stuff happens, you want to sell before you think you should sell, right? Like I would have sold it probably the day of the election or the day after, because afterwards, well, where is the hype? The hype is kind of gone, at least for the time being, and now they're actually down in the position and they're just holding it, right? They went from being up over 100% to down. So that's the whole point, is that sometimes being contrarian, yeah, it works out in a sense, but you got to know when to get it. And this is you got to know when to get out, and that's why, again, having that plan and sticking to it. This is the price that I'm okay to sell. Or when it comes to something like Bitcoin, I'm not selling until 1 million, 2 million, et cetera, et cetera. Every single investment that I have, I know when I would sell, or I know, hey, this is a long-term holding. I'm not planning to sell for 20 or 30 years. Every single position, and every single position I'm entering, I know why I'm entering it too. This is the historical, valuation. It's below that valuation, or maybe, hey, I think it's worth more than the historical valuation. That's why I'm buying it, right? You need to know what you're buying, why you're buying, et cetera, et cetera. So anyway, I could go forever for this, but I'm going to keep it there. Like I mentioned at the start, please like, subscribe, comment, all that good stuff, and stay tuned for more.